Hi everyone, welcome back again. So this is the part 3 of the basics of absorption costing versus marginal costing. I'm Chawildy, and you may contact me at wildy231@gmail.com if you have any questions pertaining to this topic. Alright, so basically this continuation is to explain to you what happens if if you're going to look at 2 months. Okay, 2 months of absorption costing and marginal costing. What would be the difference, and how would that affect your view of like which method would be able to give a better profit, or for the matter a smaller loss. Alright, so we are going to use the same figures for example. Okay, so it will be about a toy shop making toy cars, and the cost of making each toy car will be $5 each, labor cost $3 each. In a month there will be 1,000 cars being produced, and overheads will be at 500 per month. And what else? The overhead per car will be at 50 cents each. Not forgetting also that these are representing fixed costs. Okay, and the other fixed cost that we have is administration. Okay, it will be 1,002 per month. Alright, so these are the key things I'm going to use in my example. Let's go straight to where we stopped from the second video. So this was where we stopped at, and remember in my previous video I said that what happens if, let's say, instead of making 1,000 and selling all 1,000, what happens if the business made 600 instead in month 1. If the business makes 1,000 and sells 600 in that month, revenue will be 600 times 10, $6,000. Okay, then of course the result is that there will be some closing stocks, and closing stocks will be at 400 units at $8 each. If you recall, why $8? Because it's 5 plus 3, the variable cost of each unit. So resulting in the variable cost of goods sold of 4,008, contribution 1,002. Your net profit is at a negative 500, which is in other words a net loss. Okay, so this was what we looked at the last time, and when we looked at absorption costs, if you have 6,000 units that are $6,000 being achieved from selling 600 units, but 400 units not sold. Now, the cost of each of these 400 units not sold would be comprising of variable costs, $5, $3, and a component of overheads. That works out to be 5 plus 3 plus 50 cents. Cost of goods sold will be 5,001, and resulting in a gross profit of 900. 6,000 minus 900, that gives you 6,000 minus 5,000 gives you 900. 900 minus 1,002 gives you 300 of net loss. We understand that why is it that absorption cost and marginal cost gave you different net profit was because of these two things: the value of the closing stocks from marginal cost and the value of the closing stocks from absorption cost. By the way that these two stock values are calculated is that it's quite different, because absorption cost takes into account that each unit of closing stock must, or for the matter each unit of production must include 50 cents, a component of overheads, unlike marginal cost. Alright, so then that gives rise to the difference between the two net profits between absorption cost and marginal cost, 300 and 500, and that shows you a difference of 200, which is actually the difference between the opening and the difference between the two closing stocks from marginal cost and absorption cost methods. Now with that, let us continue from where we stopped the last time. Okay, you are at month 1, and if I have closing stocks of 3,002, we are looking at the marginal cost approach. So if I have closing stocks of 3,002, 3,002 would be opening stocks in the following month. Okay, so how many units does 3,002 represent? 400 units, because last month I sold 600 but I have 400 left, so the 400 is carried forward to month 2. And in month 2 I make another 1,000, so total how many units do I have? I have in total 1,400 units. Alright, and now in month 2 how many can I potentially sell? I could sell at maximum 1,004, and at what cost? Or at what price? $10 each. So this gives me total contribution of 2008. Contribution margin, as you can compare, for the 2 months is exactly the same. Now next thing, 2008 minus the respective costs gives me my net profit. Now let's observe the next one, the absorption method. Okay, so how would the absorption method look? How different would it be? If all of that 1,004 is sold, then you have revenue of 14,000. Okay, exactly the same as you can see here. Right? Okay, the opening stock of course is slightly different. Why is that different? Okay, it's different from marginal method because for absorption method, stock values have a component of this fixed overheads. That's why the cost per unit for absorption method will tend to be a bit higher compared to the marginal method. Okay, so the respective costs like material and labor and overheads pertain to making 1,000 in a month, so they are the same as the marginal method. And in fact, if you can say, it's the same as the previous month. Okay, total costs including the overheads will be 11,900. Okay, your cost of production is, or cost of goods sold will be 11,900 minus against your sales, you get gross profit of 2,001 minus against your fixed admin, you get net profit of 900. Okay, and then of course the gross margin is exactly the same. Now do you observe here that, hey, wait a minute, again the stock, the profit of month 2 and month 1, and month 2 of this absorption method is exactly different. You observe here, absorption cost gives you net profit 900, whereas marginal cost method gives you net profit of 1100. Different. Why different? The difference arose or came about because of the difference in the stock value. Yes, you're right. Actually, so long as there is opening and closing stocks, it will result in the absorption method and marginal cost method having different profits, right? So observe here, you have 1100 for marginal method and you have 900 for the absorption method. So 900 versus 1001, you find that the difference is 200. Why is there a difference of 200? Well, the reason is because of the calculation that went into how this opening stock under marginal method is calculated and how this opening stock for absorption method is calculated. Here it is. Alright, so as you can see here, it's very clear that these two methods are inherently different because of the way that each unit of output is being valued at. Okay, so is there a best method? Well, there is no real so-called best method. It depends on the purpose and the situation that you're looking at. What do you intend to use these methods for? Right, so well, let me add on one more example just for interest sake. Right, what happens if we have some closing stocks? Instead of selling 1,004, you sold 1,003. That means revenue will be 13,000, and which will result in you having closing stock of 100 at how much each? $8 each if you're talking about the marginal cost method. So this results in you having contribution of 2006. Okay, net profit reduces to 900. Now let's apply that to the absorption method and see how it differs. So if it's the absorption method, if it sold only 1,300 in month 2, total revenue will be 13,000. What about closing stocks? Closing stocks will be 100. At what price each? At what cost each? Will be 850. How do I get 850? It's actually 5 plus 3 plus 50 cents. Okay, reason why there's a 50 cents is because each unit that is calculated under absorption cost must include an element of overheads. Okay, so this gives us our cost of goods sold. Revenue minus cost of goods sold gives us the gross profit, and then net profit here again 750. And notice again, it's exactly different. Right. So as you can appreciate here that the difference between marginal cost and absorption cost method will always be present so long as there are opening and closing stocks. And the difference between the two, absorption cost and marginal cost, is mainly due to the difference in the stock values, right? Which results in the final difference of 150. Right, so that is the main things which I've talked to you about. But overall, why should people use absorption method? Well, it's allowed by the financial reporting standard. Of course, the other thing is that it ensures that you do not underprice your product. You avoid underpricing your product, because each unit that you produce, you factor in an element of overheads. That's why it's in a way an ideal method to use. How about marginal cost? Okay, we'll talk about it in the next video. So, but in the meantime, take some time to absorb the calculation, try to understand the implication, in the workings and how it differs. Alright, so I hope that this has been informative, and have a good day. If you have any questions, again, you can drop me a mail at wildy231@gmail.com. Have a good day. Take care.